Hello traders, welcome to another weekly analysis. Today is Monday. We are right at 2:15 p.m. Eastern Standard Time. So as usual, today is a quiet Monday trading day, but I think this week is going to be a more excited week, definitely compared to last week. And what's going to drive the sentiment for this week is you have to watch out for the geopolitical events. Now, of course, the North Korean issue continue to be on the headline, but nobody or no one can know what's going to happen to that aspect. The other thing is the Catalonia event that's still ongoing, and although Monday today is supposed to be the deadline for the Catalonia region to declare independence or not, but they failed to do so. So basically, the Spanish government has given them another new deadline, which is this Thursday. So nobody knows what's going to happen, whether they are going to declare independence or we are going to have the mediation, things like that. Now, of course, if there's no negotiation or if they really just outright declare independence, that's going to be very negative in terms of the Eurozone. Now, on top of that, today the election result came out from the Austria government, and the right-wing party, as expected, has won the election. Now, that also inject some negative sentiment for the Eurozone. So, let's get into it first. Let's get into what's going to happen this week in terms of fundamental data. Right now, the interesting thing is that the fundamental data, or interesting things that, at the beginning of 2017, we had a lot of risk sentiment coming out from the geopolitical events, right? First, of course, Donald Trump got elected, and then the upcoming France election, German election, and even Dutch election has been very volatile for the currency market. Then after the first two quarters, we come to midsummer. Everything is quiet. Everything seems to be peaceful. Then all of a sudden, you have a North Korean crisis, the missile crisis, and now we are approaching last quarter of 2017. It does seem that the sentiment from the geopolitical aspect has picked up again. So it become quite volatile right now. So in those kind of circumstances, you have to understand that which area is going to, or which element is going to have a more weight, basically, because a lot of people trying to trade the fundamental data, and sometimes they were puzzled, saying that how come the data is very positive, but the currency react in a completely opposite direction. And the reason is because you might have a new updates from the geopolitical situation. So right now, at least for this week, it is a geopolitical week in terms of the Eurozone. So let's get into it first. Now, over the weekend, we have the Bank of Japan government Kuroda speaks. Not much going on here. Basically, the situation for Japan is still the same. Now, I will jump into my analysis here. So, situation for Japanese yen is still the same. They are still fundamentally weak due to the QQE and the deflationary environment. Of course, they are still a safe haven currency. So, a lot of safe haven events will cause them to raise up because of the safe haven inflow. However, as I kept mentioning in a previous week, right now the most risky events, basically globally, is the North Korean missile crisis. And because of that, the Japanese yen has basically lost the safe haven status, in particularly from these events. Why? The reason is because geographically, they are just right beside North Korean. That means that if we have a war with the North Korean, Japan will be directly impacted throughout this event. And it just asks yourself, if you're an investor, are you going to put your money in a war zone? No. Like most people, when their war happens, they want to flee, they want to get out of there. So because of that, usually people like to put their money in Japan when the world is in crisis. But now, because of precisely these events, now people would choose Swiss franc because Switzerland, at least, it's far away from the Eastern Asian. It's far away from all these, missile crises. Now, the only reason for buying Swiss franc, of course, now the SNB, the Central Bank of Switzerland, has been very notorious in terms of interventions. But to be honest with you, if we really have a war, or if the missile from North Korea really accidentally hit, maybe Guam Island, maybe accidentally hit homeland of Japan, then you're gonna see a lot of money flow into Swiss franc, and I don't think the central banks has enough power to stop the buying. So basically, that's why it's basically the number one safe haven currency right now. It's Swiss franc, and because of that, it puts Japanese yen in a very negative position. So it has been on our selling list for quite some time. So that's one of the events first, according what happened in Japan. Now, another thing many of you might have missed is that this weekend we are going to have an election for Japan. So what happened is that ever since the North Korean missile crisis, Prime Minister Abe's poll basically went up because he's a more central to right wing prime minister. So when you have a war happening or a sort of crisis, generally speaking, people would like to look up to the familiar faces. So because of these events, his poll actually went up, and then he grabs this advantage and basically dissolved the upper parliament. So now they are going to have a snap election. Now, does that sound very familiar? Yes, because back in June, we had exactly the same thing happen in UK. However, that election turned out to be a big disaster for the Conservative Party and for the Prime Minister May. So we are going to see whether Prime Minister Abe is going to, basically whether his strategy is going to work, if he's going to win the election for the upper house. If that's the case, of course, that's a more strong sentiment for Japanese yen. But it's going to be short-lived because the fact is it's still a fundamental weak currency. However, if we have an election upset, if Abe actually loses the election, it will be quite volatile because that means he might no longer be the prime minister. And what's going to happen to his Abe economics? Are we still going to continue the QQE program? And how is Japan going to basically face the North Korean issues? And how is the new leader going to build a relationship with Donald Trump? So that's all going to be a big question mark. And of course, as I mentioned, whatever happened in the financial market, nobody likes uncertainty. So if that's the case, it's going to be quite negative for Japanese yen. So because of all these events, I do think it's still, I say sentimentally neutral, but I personally leaning toward more on the bearish side, in a negative side for Japanese yen. But that's pretty much the two major events if you are interested to sell Japanese yen. Over the weekend, we also had Fed Chair Yellen speaks. Now, it's not nothing too important, but what happened to the US dollar right now is basically fundamental data had been strong, right? There's no question over the US economy. It's one of the strongest economy right now that really picked up quite well in 2017. However, market does not pay attention to that, right? Right now, market is really paying attention to whether the Federal Reserve is going to continue raising interest rate. And for the Federal Reserve to do that, the inflation has to continue edged higher. Now, that was not the case. And previously, Federal Reserve came out saying that the low inflation is transitory. What does that mean? Is that they think the inflation eventually is going to pick up. Why? Because according to the economic theory, when the employment is near full, right now US has a full employment, Everything else is looking quite well. The GDP, retail sale, labor market. The only thing that's lagged behind is inflation or inflation-related data, so like CPI or like wage growth. Now, in the previous few months, everything was pretty much lagging, and the only thing that supports US dollar is that Federal Reserve had turned to become quite hawkish. So they were saying that, don't worry about the low inflation, it's just transitory. Now, however, they started to change their stance last week. So basically, they are still quite hawkish. They are still looking to raise interest rate. But right now, they basically admitted that they did not know why the inflation is still low. So back then, they're saying that's transitory. Now they started to question whether it is really temporary or not. And they didn't offer any solution or any answers. So basically, they are as puzzled as many of the economists or traders. They don't know why the inflation hasn't picked up yet. And that's all fine until last Friday, because if that's what the Fed is looking at, then of course that put inflation data become one of the most important data. And last Friday, unfortunately, the data was the miss, both in the headline inflation and core CPI. So this has basically, finished the week for US dollar into a more negative sentiment. Now, if you look at DAX, we had this nice higher high, all the way hitting 94, and then it really just dropped from 2 weeks ago. Right now we don't know whether this is a turning of the trend or it's just a retracement. The probability for December rate hike has decreased significantly. Nevertheless, you have a lot of trader or a lot of deep buyers still interested in US dollar, and US dollar, as I keep mentioning, it is still a fundamentally strong currency. However, at the beginning of this week, for now, it is a weak currency. Personally, I wouldn't sell it because I don't like to go against his fundamentals, especially it's very strong. And the only sentiment or the weak sentiment really came from the missed CPI. But if you look at the CPI data, it is still higher than the previous for headline. Of course, core we did miss and lower than the previous. What I'm trying to say is that we need more catalysts to give us a certain direction. So right now, I'll say it's neutral. Right? Sentiment, yes, it's negative for me because the fundamental data has been very strong. I do need some more catalysts, basically to give me more clear direction for the US dollar. So right now, if you look at this week's calendar, we don't really have any tier 1 data for US. Right, there's nothing that's going to drive dollar. Of course, we might have some Fed member coming out and say any new things that's beyond our prediction and it's not scheduled on the calendar list. Take a look at next week. Next week, we also don't have anything. Well, we have GDP data, advanced GDP. So that will be the only catalyst. Then that's pretty much the end of October. If we are heading to November, then of course, the December rate decision will become more important. But as for this week, currently basically it's neutral for US dollar. But the reason, again, we do have the fundamental strong reason to buy it. But unfortunately, last CPI, which is last Friday, it had missed both headline CPI and core CPI. So that basically had given the US dollar a negative sentiment all the way until now. Today, we don't have much going on. Now in the afternoon, later on, we're going to have a CPI for New Zealand. Now this is something interesting. That's something I will be trading. Now, New Zealand dollar, ever since the election upset, plus the dovish RBNZ and the downgraded forecast by the government. Basically, it's a very weak currency, both in the fundamental and sentimental. However, it has been on the downtrend for many weeks. What had happened is that it basically bottomed out, at least for now. So a lot of traders unwind their positions, and a lot of new sellers waiting on the sideline. They want the new catalyst to continue the negative sentiment so they can jump in and keep selling New Zealand dollar. Now, a lot of buyers, on the other hand, still want to buy New Z because, as I keep mentioning, the fact is there are still the highest yield currency. So a lot of buyers still waiting on the sideline to buy New Zealand dollar. And that's why it makes this CPI data become quite important today, because the fact is that we didn't have much catalyst for the previous 2 weeks. So this CPI will be the only important catalyst to give New Zealand dollar a short-term momentum. So of course, if we miss the reading, I would be more inclined to sell it. The reason is because it had basically come to the table with negative sentiment and fundamental already. So of course, if we have this catalyst to basically start the negative momentum, that would be a very good trade. On the contrary, if we have a positive reading of better than 0.4%, that will basically boost New Z for at least for this week. Now, personally, if you want to sell New Z, you have more options to choose. New Z dollar, New Z CAD are all quite a nice pair to go with. But if you want to buy New Z, then I would really just go with New Z yen, because for me, everything else it's either equal or probably slightly strong than New Z. Maybe not for now, but any events can lift those thing up. For example, if you're thinking to, sell Aussie New Z, then tonight maybe the RBA, the monetary policy meeting minutes will raise the Aussie dollar up. If you're looking to sell pound New Z because you think British pound is weak right now, which it is, but that's all come from the rumors of the Brexit. If anything positive happens, British pound will be raised up. And don't forget, tomorrow we also have the CPI for UK. So for me, the only thing that's probably gonna run for this week, if we have a positive CPI for New Z, is New Z yen. So that will be something I will more inclined to buy out of a positive outcome. Now tonight, of course, we're also going to have a monetary policy minute for Australian dollar. Now Aussie is in a very neutral spot. As I mentioned, fundamentally and sentimentally both neutral. Last week, I'm saying that it has a sentimental negativities, and the reason is because RBA had basically giving out some dovish comment, but those are not in written. So basically, those are comments from the officials, and that's why tonight the monetary minutes will be important, because we really want to see what had they discussed during the meeting. If they really change their stance, or are those comments are just comments, they are not really materialistic change. So we'll have to see, but this will be an important catalyst simply because we didn't have any other catalyst previously. So of course, if you want to trade minutes, you have to understand it's not about how you think about a minute, or it's nothing to do with your interpretations. If you want to trade a minute, it's best to wait at least an hour or two to let the market tell you which direction it should go. Now the reason is because a lot of time you're reading the minutes on hindsight, it might shows nothing because everything is within the words. It's very ambiguous. So if you want to trade it, the best way is to let the market tell you the direction. And personally, that's always my strategy. I don't like to jump into and trading the minutes because basically, honestly, I'm clueless. Right? I don't know how it going to be interpreted by the market or by the traders. So I often just stay on the sideline and let the market tell me which direction it should go. I would have certain pairs to be ready to trade it. For me, right now, same thing, the weakest currency will be Japanese yen. Of course, because the New Z CPI will come before the minutes, of course, if this CPI is a miss, then New Z will be very weak, then you can buy Aussie New Z as well. And that's pretty much the biggest catalyst for Aussie. Another thing to mention is the copper market. If you look at that, we actually had a very strong rebound from the copper market. Iron ore is still not looking too well, but copper itself is strong enough to support Aussie. If you also look at WTI, also went higher, and the reason behind the copper is also there's a fundamental drive. Basically, it's from the Chinese PPI, which came out Sunday. So 6.9% is a very high reading compared to the forecast and the previous. Now, this has injected a lot of new belief that China or the Chinese producers is still in high demand for manufacturing. So of course, that's going to help the import from Aussie. So that's something, if you want to sell Aussie, you do have to understand the commodity market is in a very good spot right now. So that will be the risk for your Aussie short. On the contrary, if you want to buy Aussie, this will be another good sentiment or reason for Australian dollar to go higher. But just remember, most traders are waiting for the monetary minute to come out right now tonight to give us a more clear direction. Now, once this comes out, then of course on Wednesday you will have the employment data. This data usually is very highly fluctuated. It creates a short-term momentum, but we need to see how the RBA react. Basically, how the RBA is currently standing at. This will give us a more long-term direction. Then we can use this employment data to either getting to ride the trend or maybe getting at a retracement. Tomorrow is a very big event for British pound. So British pound, as I mentioned, it has been very hard to trade it. And the reason is because it's really in a roller coaster ride. The Brexit negotiation is really ongoing, and we have different rumors pretty much every day, negative or positive. And that's really drive the country or the currency itself. Now, if we don't have a high inflation, I would say that British pound is definitely going to the downside. Right? If we don't have high inflation, the reason is because nobody likes this kind of uncertainty, right? Nobody likes to invest or to put up their money in this currency when the country's future is not even certain. However, the reason that British pound had a strong buying momentum was because back then the Bank of England had come out and say that they have to raise interest rate in order to control the high inflation. And if you expand this, you will see the inflation really went very, very high ever since the Brexit. It basically jumped, right, from 0.045, 0.6, and suddenly jumped to 1.6, 1.8, 2%, 2.9%, and right now the expectation is 3%. So basically, if we're really hitting 3%, right now the probability for Bank of England to hike is already very high. If we hit 3% or even higher, then you will see a strong buying into British pound. Of course, don't mistake this buying into British pound as a confidence over the economies. It's nothing to do with the economies of UK. It's just for the traders to speculate it. Basically, they're trying to price in for the next BOE meeting. So if the CPI today or tomorrow is 3% or higher, then of course British pound will be going higher. On the contrary, if we miss the reading again, which it had happened before, you see, 2.6, 2.6. If we miss the reading, then that gives Bank of England more leeway to hold down the rate hike. That will be very negative for British pound. Now, as for now, British pound is a negative currency in terms of sentiment. But that's purely because today we had rumors saying that the Brexit might be a breakdown. So basically right now you have a lot of negative sentiment coming out from the negotiations. As many of you know, the Conservative Party itself was basically rumored that they were trying to oust Theresa May. So basically a lot of unpredictable events happening in UK right now. And we didn't have much positive news coming out from the Eurozone as well, in terms of this negotiation. So if the CPI is positive or negative, it's going to completely change that sentiment. So that's something I will wait to trade. I'm not going to trade into these events. It's just too hard to predict any direction. So I'll rather wait or even trade after, instead of trading right now. And of course, right after that, you have Carney Speaks, which I assume he's basically going to address something about it. And other than that, you see here there's a CPI for Europe, but it's not something I pay attention to because, as I mentioned, right now the euro is really going to go around the geopolitical events. So basically, the fundamental data for euro, if you take a look at this, the fundamental data for euro had been quite strong. There's no doubt about it. But right now the sentiment is negative due to all the geopolitical events. And the only thing that might turn that around is the ECB. If the ECB can come out and be clear about their plan, whether they are going to taper and how much and how long, that will of course give market a very clear direction. The reason they don't want to do that is because back then they start to hint about tapering, and what happened is euro shoots up, right? If you zoom out. So at the end of May, basically midpoint, they start saying that, okay, we are going to taper. And from basically April, May, June, July, all the way until September, it has been a one-way street, to a point that ECB had to come out saying that they worry about the currency market. They're thinking it's an overshooting. Because what's going to happen is that if the currency continue to edge higher, it's going to hurt their QE program, right? Because the whole purpose is to depreciate the euro in order to help the business, in order to help the export. So if the currency market basically goes in an opposite direction, that's going to hurt the central bank's plan. So that's why they don't want to come out and be too frank about their plan. But because of that, market is really clueless. As you can see, we are really basically got a sideways movement for the whole past months till now. So right now, I don't have any clear direction. I know the sentiment is negative, but this negativity came directly from the geopolitical events, which means those events can turn around any moment. And if they do, then you will get locking. You might get stop out, basically. It's hard to predict how the geopolitical sentiment is going to be. So right now, the only thing that's for me to basically want to trade euro is if ECB can come out and give a more clear guidance before their meeting, which is next week. I don't think that's going to happen, to be honest, because they would rather just wait to give you the information next week. So for me, it's not something I would trade. Euro, it's not something I like to trade for this week. And let's keep going. So yeah, here you have ECB President Draghi speaks, but as I mentioned, it's very unlikely he will give you any meaningful guidance since the meeting is coming on next week. Or maybe he might, we'll see. Then you're going to have labor data for UK. But as I mentioned, everything will be determined by the CPI. So this will only be a follow through. I don't know which direction I will trade it, but because I have to wait for the CPI data first. Obviously, if you have a positive CPI and you have a positive labor market, of course, there's no brainer. That's a one-way street. It's going to upside, and vice versa. If you have negative CPI, negative employment data, what's gonna happen, or what should you do if you have a mix? If you have a positive CPI and a negative labor market. Now, that really depends on the updates from Bank of England. But generally speaking, if I have a very strong catalyst followed by an opposite catalyst or a small catalyst that give me an opposite outcome, I will actually use that opportunity to get into a trade in a retracement. So basically, if you have a positive CPI and you see British pound shoots up, okay, let's just say you go with pound yen, and then you have a negative climate count change, you have a negative average earning, then you will see pound yen drop. Now, I will actually use this chance to get into a pound yen long. And the reason is because I think if you want to compare catalyst to catalyst, of course, the stronger will always win. That means the strong catalyst or the sentiment from that catalyst will be lasting longer. So that means I will use this kind of events to actually get into a trade at a retracement. We do have FOMC members speaks, and then coming out again, we have the Australian employment data. And then, of course, Chinese GDP and industrial production data also coming out. I think October 18th is also the National Congress of the Communist Party from China. So this will be a big event also to watch out for. It's not something you can trade directly, but it will impact the risk sentiment for the global market. And coming down to Thursday, again, retail still, it's a good event you can trade for a short term, but you will have to see how the CPI come out first tomorrow to give you a clear direction. Then Friday, we have the Canadian CPI and core retail. Now, this will be tradable, but you have to first of all to know that what's happening now for Canada. So Canadian dollar is still a very strong currency, fundamentally speaking. And not only they have, they are the only central bank, same as US, that are able to hike in 2017. And furthermore, they actually hike consecutively. Of course, because of that, people are not expecting them to hike third time. Especially previously, the government polos came out and basically cooled down the market. But other than that, the fact is that within the G7 countries, Canada is the strongest country in 2017. The GDP is actually hitting 3% this year. And the oil price, as I just showed you, actually edged higher. I forgot to mention the reason. The reason is because we do have the conflict right now over the Iraq and the Kurdish territory. So basically, many of you might know that the Kurdish territory had run a referendum previously, I think 2 weeks ago. And the referendum was a yes. That means they are basically declare independence. And the Turkey and Iraq government threatened to retaliate by cutting off their oil lines. So basically, they are going to stop accepting the oil export from Kurdish territory. Now, that has significantly impacted the oil market. Of course, it turned out that they didn't do it back then, but right now the rumor or we have some update news is that the Iraq government had controlled some Kurdish territory. Why is it a huge impact? It's because the oil export from the Kurdish territory was actually the second largest among the OPEC members, beside Saudi Arabia. And that, of course, going to jeopardize the supply, and it will lower the supply, of course, hence will help the oil price. So that's what's happening right now, and that's also going to help Canada or the Canadian dollar. The risk of buying Canadian dollar right now is the NAFTA deal. The NAFTA deal is still ongoing with US, and really no one knows how it's going to turn out. But basically, that's one of the risks. The other risk is the fundamental data itself. Because right after the Bank of Canada raised interest rate consecutively, they are now really wait and see. They want to know if the economy can sustain this kind of impact. And that will have to be shown by the fundamental data. And that's why the data right now become more important. Not only the CPI, you also have to look at the retail. Because what's going to happen is when the money become more expensive, and especially Canada has a very high household debt ratios. If you raise the interest rate, people of course going to have less money to spend. It's going to hurt the retail business. So both data are important. But personally, you could, this kind of trade at Friday is always hard to trade, because even if you are on a good short-term run, are you going to close up, move your stop loss, or are you going to hold the trade over the weekend? That's something you have to make your own decision. Next week, as I mentioned, is the Bank of Canada rate decision. Although we are not expecting any rate change, it will give us, especially the press conference, it will give us a more basically direction of where the government is right now, or where the central bank is. So that is something you have to just watch out for. I'll see what happened to the data. Obviously, if I have something very positive, I don't mind to get into it and holding over the weekend. If I have something very negative on the contrary, I might just go with the short term and wrap up. And the reason is because, again, I don't like to sell currency that has a fundamental strength, because eventually that strength will be shown, will be picked up, basically. So that's pretty much, and then you have Yellen speaks again. That's pretty much the weekly events and the updates. So just to recap, for Aussie, we are waiting for tonight's monetary policy to give us a clear direction. Then we can trade alongside that into Wednesday's employment data. And right now, the copper market had hit new high due to the Chinese demand. But you do have to watch out exactly how RBA stands right now. Canadian dollar is strong, but because we don't have any more new catalysts, we do need something more to push it upside or to the downside. So we have to wait for Friday to give us a clear direction. Swiss franc, nothing much to talk about it aside from the safe haven currency, which, by the way, it also is the strongest safe haven currency right now due to the geographical location. It's way much better than Japan. Now, Euro, don't have anything happening. Watch out for the geopolitical updates, especially from Catalonia and Spain. And another thing to note is that Australia government, the right-wing party, had won the election. Other than that, next week is the ECB meeting. So if you are in Euro trade, you have to be careful that ECB meeting is coming up. British pound tomorrow, it's a big catalyst. CPI will give us a more clear direction. If we have something at 3% or higher, pretty much the probability for Bank of England to raise interest rate is very, very high, and that's going to cause British pound to go up. On the contrary, if the CPI meets the expectation, you will see the currency drop. Then after this, throughout the weeks, we also have the employment data and retail data. Japanese yen, again, it's a very neutral currency, fundamentally weak because of the current events in North Korea, and the geographical location, and the fact that this Sunday we're going to have a snap election. It become a quite bearish currency for me due to all these reasons. New Zealand is a weak currency, both fundamental and sentimental. However, today we're going to see a CPI quarter on quarter, which will actually give us a new sentiment into this currency. And finally, US dollar right now fundamentally strong. There's no doubt about the fundamental strength. However, because of last week's CPI data miss, right now it's a sentimentally weak currency. This week we don't have any tier 1 data to drive the US dollar. But watch out for the geopolitical events. Watch out what happened in the White House, especially in the tax cut plan, whether it's coming through or not. That's all going to affect the currency, especially when it did not or it does not have any tier 1 calendar events. So that's pretty much it. And if you have any questions, feel free to ask me. Other than that, I'm now going to do more of a daily short updates on my Instagram. So if you're interested to basically follow up after this video, if you want to know what's going to happen, but in a day-to-day basis, I do this kind of 1 minute update for the market, and that would be very helpful if you want to basically follow through the fundamental updates. Okay, thanks for watching, and hope you enjoyed this video, and safe trading for this week.